I'm AI Avatar of CA Ratan Mundra. Welcome to this regulatory overview on anti-money laundering, counter-terrorist financing, and know your customer compliance for reinsurance companies operating as branches of foreign entities in India's International Financial Services Centre, commonly known as IFSC Insurance Office. This video has been prepared strictly in accordance with the IFSC AML, CFT and KYC guidelines 2022, along with subsequent regulatory clarifications and circulars. The objective is to provide clear, practical, and consolidated guidance for compliance teams, senior management, and regulatory officers of foreign reinsurance branches operating in IFSC. Reinsurance entities operating in IFSC fall under the regulatory supervision of the International Financial Services Centres Authority, or IFSCA, as regulated financial institutions. IFSC reinsurance branches are classified as reporting entities under the Prevention of Money Laundering Act 2002. Accordingly, they are required to comply with AML, CFT, and KYC obligations and are subject to reporting and oversight by both IFSCA and FIU IND. A reinsurance company operating as a branch of a foreign entity and not incorporated in India follows a modified governance framework compared to locally incorporated companies. For AML and KYC purposes, the governing body is defined as a branch-level committee, duly authorized by the board of the parent company. This committee is responsible for approving AML, CFT, and KYC policies, overseeing compliance implementation, ensuring regulatory adherence within the IFSC. Every reinsurance branch in IFSC must appoint a designated director, commonly referred to as the DD. In the case of a foreign branch, the head of the branch, also known as the head of the regulated entity, may be appointed as the designated director. The designated director must be part of senior management, possess adequate decision-making authority, be responsible for overall AML and CFT compliance. It is important to note that the designated director and a principal officer cannot be the same person. In addition to the designated director, the branch must appoint a principal officer or PO. The principal officer must be a management level official, must be based in IFSC, must be independent of business and internal audit functions. The principal officer is responsible for day-to-day ML and CFT monitoring, filing regulatory reports, with FIU IND acting as the primary liaison with regulators and law enforcement agencies. As Thieves Insurance Office entity operates as a branch of a foreign parent, it is required to implement group-wide AML and CFT programs. These programs typically cover customer due diligence policies, risk assessment methodologies, sanctions and watch list screening. Information sharing mechanisms within the group. Appropriate safeguards must be maintained to prevent tipping off and to ensure confidentiality of customer information. A key regulatory principle under the IFSC framework is the stricter standard rule. Where there is any difference between AML standards of the parent company's home jurisdiction and AML standards prescribed by IFSCA, the IFSC must apply the higher or stricter standard. If secrecy or data protection laws in the parent jurisdiction restrict compliance, the branch must inform IFSCA in writing and implement additional risk mitigation measures as directed. IFSCA requires all reinsurance branches to adopt a risk-based approach, or RBA. While reinsurance transactions with regulated insurers are generally considered low risk, the branch must still assess business risk, customer risk, country and jurisdiction risk. Risk assessments must be reviewed periodically and whenever there is a material change in business or customer profile. Given the lower inherent risk in reinsurance, simplified due diligence, or SDD, may be applied in suitable cases. SDD may include reduced documentation requirements, lower intensity of ongoing monitoring, extended KYC updation cycles. However, simplified due diligence cannot be applied if there is suspicion of money laundering or terrorist financing, the customer involves high-risk jurisdictions or politically exposed persons. Reinsurance branches must conduct customer due diligence for all counterparties using reliable and independent sources. For legal entities such as ceding insurers, verification must include legal existence, registered address, regulatory license. Authorized signatories. Identification of beneficial owners is generally not required for listed companies or regulated insurers unless suspicion of money laundering or terrorist financing arises. Periodic KYC updation is determined based on customer risk categorization. The standard updation cycles are high risk once every 1 year, medium risk once every 3 years, low risk once every 5 years for resident Indian customers with an existing group relationship in India. Extended cycles apply: high risk once every 2 years, medium risk once every 8 years, low risk once every 10 years where group risk ratings differ. The strictest cycle must always be followed. Every reinsurance branch operating in IFSC must register with FIU IND through the FINGate 2.0 portal. Key registration requirements include registration prior to commencement of business or within 30 days. As a reporting entity, the branch must submit suspicious transaction reports, or STRs, within 7 days of forming suspicion, cross-border wire transfer reports for transactions exceeding INR 5 lakh or equivalent non-profit organization transaction reports were applicable even if transactions are routed through an IFSC banking unit. The reinsurance branch has an independent reporting obligation. All records relating to customer identification transactions business correspondence must be preserved for a minimum period of 6 years from the end of the business relationship or completion of the transaction. Records may be stored outside India, provided they are readily accessible to IFSC and law enforcement agencies. Reinsurance branches must conduct daily sanctions screening against United Nations Security Council sanctions lists, UAP and WMD Act lists notified by the Government of India. If a match is identified, funds must be frozen immediately. FIU IND and the designated nodal officer must be informed within 24 hours. In conclusion, reinsurance companies operating as foreign branches in IFSC must maintain strong AML, KYC, and FIU compliance frameworks. Although reinsurance is generally considered low risk, regulatory expectations remain high, particularly in governance, reporting, and sanctions compliance. A robust compliance culture not only ensures regulatory adherence but also strengthens IFSC credibility as a global reinsurance hub. Moonses and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence. A pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup. Operational support and handling complaints, risk management renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BATF, and ancillary regulations, and fintech expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSC, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.